Hey guys, welcome to Money Mindset and more. And today's question is a quick follow up question on yesterday's post on bookkeeping. And the question is, what are some of the ways that bookkeeping can help businesses cut down on unnecessary costs? And I think that is probably one of the major parameters you should always consider while doing bookkeeping. In my experience, there are various ways, but 7 ways where you should definitely analyze how business is going and see what you can do better in reducing your cost, streamlining your process, and things like that. The first one is expense tracking. If you do proper bookkeeping, you can track your expenses. You can see where you are spending money which is non-essential for your business, and you can easily cut down on those based upon how your business is performing. The second one is budgeting. So if you budget properly, you will always have budget versus actual variation, and by analyzing those variations you can either know that you are budgeting too much for something or too less for something. So for example, whether you are buying more supplies or you are paying your employees less or vice versa. Those things you can analyze after budgeting. You can also identify efficiencies which can be improved. So if there are vendors, there are product shipping costs, for example, related to a product business, you can analyze all those things in bookkeeping. So you can optimize your, for example, you can optimize your shipping costs based upon the dimensions of a product. So if you're selling something which is, let's say, 1 pound or less, then you can use USPS for shipping. But if you are selling something which is 1.1 lb, then you have to use higher shipping services. So how you can cut down, let's say, zero point 0.1 lb of weight so that you will have a less shipping cost. Those kind of things you can analyze very well when you do close look on these bookkeeping items. Another thing is that it will help you in streamlining your process. So you will have your designing process to, let's say, shipping process, the end to end. You can see where you are spending more time and money, and you can streamline based upon that. The next one is tax deductions. So if you map all the items accurately every week or every month, you will actually get better tax deduction end of the year. Most of the time you will miss items which you think that cannot be expense, but IRS allows you to expense many of the business items. So if you don't do proper bookkeeping, you will miss those tax deductions. The next one is cash flow management. Extremely important. If you have, let's say, debt where you pay interest, or you have credit cards and other things where chances of paying a late fee, all those kind of things can be easily managed if you know what cash you have in this month, how it is coming up in next month, and what are your requirement against those cash coming in. If you have a shortfall, you will figure out whether you want to use line of credit or any other debt. If you are in plus, then you have to see what extra you can do in business to grow, buy new equipment or spend on advertising and things like that. And the next one is you can do vendor and supplier analysis. Some of your vendor might be increasing their cost over time and you might be not realizing it, and some of the suppliers might be not increasing their cost but decreasing their product quality and things like that. And may not be product quality, but they might be extending, let's say, your shipping duration. You are ordering something and now you are getting in 60 days in place of 30 days. So that's the opportunity cost loss for you. Those can be only analyzed if you have all the data points, what your vendors are doing, what they are providing, uh, from services, product, or costing perspective. Once you have all those, you can analyze who are the best ones, whom you have to get rid of, and what else you can add as a complementary. And the last one is preventing any major errors and the fraud, because those are the two things which is very hard to find if you don't have the proper data analysis behind it. And it can come only if you have all the data mapped in your bookkeeping. It can be software or Excel, does not matter. If you have all the data, then you can see if you have made any error. Let's say you made a error in calculating sales tax. Now that is a costly mistake. So as soon as you analyze it, you find it, you will go and, let's say, file an amendment to pay additional taxes. And other way around is that, let's say you have employees who are working, who are new, and you saw that there is a sudden fall in cash transactions in your business, or sudden high rise in the value of the transaction on credit card. All those things are symptoms of probably fraud or errors. So you have to see whether your new credit card transaction are averaging your previous past collections of data. If not, then what? If you have launched new services which are costlier, then it makes sense. But if your products and services are not changed, then it might be a possibility of fraud. So you can actually find out all those things when you have proper data points, and those can be used to cut down all the unnecessary cost. And believe me, if you analyze data today, you will at least find 2 to 3% improvement in your overall financial status within the organization. So give it a shot. Let me know if you have any other questions. Thanks. And please like, share, and subscribe. Thank you so much. Take care.